I say you turn it off. Okay, be here to get you. Once I put it, I can come to this.
Good night, everyone.
Good night.
Oh, that voice good night didn't sound too enthusiastic. Last class, last class.
We're gonna miss you.
Well, thank you very much.
Good
But
night.
we did have fun discussing people's business.
Yes, there were some juicy cases.
Yes, they were. Yes, they were. Juicy, but you
Good
learn,
night.
especially if you were from certain institutions and you realize that there are a lot of controls that need to be put in place. And I know you also understood that when a person gets a mortgage is not not like getting a car loan. There's much more involved. All right, so I'm not going to keep you all long tonight because you all need to study. So last class, we spoke about different risks. And I remember some of you were saying that, oh, this risk, this, you wondering why. I said, why were you all so quiet? And it was said that you all were trying to say all these risks. How are you going to learn all of this information?
Yes,
Well-
ma'am, that was me.
Okay, so Donella, the last chapter is again about risk, but in this one we tie in ethics. Because you'll find that in most organizations, one thing that is pivotal to when you're carrying out business is what we call corporate governance. And corporate governance speak about how you actually run your company. And when you are a regulated entity, like the banks in the Bahamas, that means at the end of each year, you have the board of directors, the chairman and the directors have to give an attestation to the inspector, stating that they have reviewed all of their systems and controls, and where there are deficiencies, there are mitigating plans to address those deficiencies. So they have to be in that mind frame from their board of directors meetings that they're telling the inspector that they know what is happening in their organization and that they have seen a draft plan from senior management and they are fully aware and they actually endorse what management is doing to address those deficiencies. Because what the regulator does is they look at that attestation and they compare it to the responses they received over the year from senior management. They may also look at responses that would have come in for examinations, and they see if they are aligned. And if they are not aligned, then the conversation begins as to where exactly the anomaly is. Is it that senior management is not reporting accurately and timely? Is it that senior management is not giving the board the information that they need in order to give an accurate attestation as to where the company is in terms of corporate governance? So if you read the papers today, I think it was the Tribune, you would see at the Bankers Conference, the inspector scolded the auditors. And he said to them, we are finding out about weaknesses in the banks when we receive the audited report. When you as an auditor, when you go in and there are weaknesses, you are supposed to, you're obligated to advise the inspector of what you see. Because by the time you get the audited accounts, it's 4 months after. And the inspector should actually know the same day when you see there is something not right in a firm, the auditors are expected to call and book an appointment and have a conference call on whatever they see. Because that's the only way the inspector would be able to say whether or not that infraction is something that's going to impact the company as a going concern. and a going concern, not just from an accounting standpoint, but a going concern as to whether or not this licensee can actually cause a run on banks, or this licensee can cause a reputation, not just for that bank itself, but also for other banks that may be doing a similar practice. And so he really came hard down on the accountants at the biker seminar. So corporate governance is something that all board of directors have to be sure that they instill in their company a culture. And that culture comes from the board. Whenever you walked in an organization and you see that these set are disgruntled, these set are doing what they feel like doing, these set are following the books, then that is telling you that the culture is not coming from the board. Everybody's doing what they feel like doing. It is up to the board to set the culture of the organization. And setting that culture means that you come back to what is ethical. As a professional, you know that there is ethical behavior in the workplace. And ethics goes all the way back to when you first started Sunday school, knowing what's right and what's wrong. So in business, it's the same thing. That behavior, ethical behavior is expected because you are a professional. And that professionalism is not just because you work in a bank, but you're also professional because remember from last class, when you work in a bank, depends on what you actually do. You may have a fiduciary duty to your clients. And a fiduciary duty means that there is loyalty and confidence, and it is expected that you will act in a professional manner. And you will see when you take the time, because many of you may not have had the time to read it, the scandals that happen in the United States and in England, they all portrayed unethical behavior, greed. Most of it was greed, lack of accounting standards. Managers and accountants in the cahoots and trying to cook the books, giving that image that the company is doing very well when the company is not. And that temptation to actually run a company in that manner is something that you see most often in the financial sector. And you may say that maybe the person who was actually caught and brought to trial didn't have any morals, but you'll find when you go down, deep down and look at what exactly happened, it comes down to having the systems and control in place in order to deter such actions. So ethical behavior itself, it's a decision making, and you have to decide what's right and what's wrong. And what guides that is the culture that comes from the board. And nothing is worse than when you have a board that's composed of persons who are not aware of what it is to be culturally savvy and to send that message down to the workers. Now, there are different models of ethical decision making. Textbook wise, they speak about the consequential perspective, looking at the cost benefit, or you could look at the absolute principle that focus on aligning the action with universal ethical purposes or principles, or it could be systems based, and that's through probing questions. But whatever method that is used is always comes down to what is right and what is wrong. So in your notes, you see they speak about the scandals at Parmalat, WorldCom, Enron, Tyco, the US subprime mortgage crisis, the Barclays LIBOR scandal, the Wells Fargo scandal. And all of these are scandals, and they go around, all of them has to do with ethical behavior. It's a value system that an organization should build, coming from the board. And persons breach these ethical standards when they know they can get away with it. Did anyone read any of these cases? Because they have quite a bit of summaries online. Anyone read any? I know you should know Enron. That is the famous case.
No, ma'am.
No? What happened to my class today? Last class, and you all fall off. If you go online, you can get little short videos, and they speak about the rise and fall of Enron and the fraud that was perpetrated by management in Enron. Let me see if I could send you. I think you could find this. And it's even in Wikipedia. So it's not difficult to find. Enron, remember, was an accounting scandal because it had to do with Anderson. And the company declared bankruptcy. And Enron, Anderson actually had to dissolve because they were along with management in creating these false accounting entries. Is a very good story to read about ethical behavior in an organization. Because in that case, Enron itself, the executives, they were indicted on many different charges and they were later sent to prison. Because when they realized that the regulators was on them, the SEC, they decided then to destroy documents. And because of Enron, that's where the famous Sarbanes-Oxley Act came out. And that looked at penalties for destroying, altering, and fabricating records and attempting to defraud shareholders. And it also looked at increasing the accountability of auditing firms to remain unbiased and independent of their clients. So even though you had Enron around in 2000, WorldCom scandal was right after it. And that was also another accounting scandal. WorldCom was the USA's second largest long distance telephone company. And the fraud was uncovered in June 2002, when the company's internal audit discovered over $3.8 billion of fraudulent balance sheet entries. And WorldCom was forced to admit that it had overstated its assets by over $11 billion. And it was reported to be the largest accounting fraud in American history. None of these sound familiar?
Enron is familiar, but not WorldCom.
No, WorldCom is a good one to read. And these scandals don't stop today. They still happen in many instances all around the world, where executives believe they can get away by creating false accounting. So even though that there are policies and procedures, there are checks and balances, there are audits, they still are able to get away with it. And this is why you see the inspector was so angry at the presentation at BICA. Because it is not expected, based upon the guidelines that are out, that auditors would actually audit a bank and not report that they see anomalies. because the regulator doesn't like to be surprised. So in Parmalat, Parmalat is milk, dairy and food production company. And it was the leader in milk using ultra high temperature processing. And the company collapsed in 2003 with a 14 billion euro hole in its accounts. And it remains one of Europe's biggest bankruptcy. Since 2011, it has been a subsidiary of French group Lactalis. And today, Parmalat is a company with a global presence, having operations in Europe, North America, South America, Australia, China, and South Africa. So if you read these cases, you will see how they all tie into corporate governance. Remember, corporate governance is how you run your company, how you set that culture of being professional and being ethical and following rules and procedures and make sure abiding by the laws. But of course, there are persons who go behind that and decide that they are the law. And they believe that they're smarter than the accountants and they're smarter than the regulators. The Barclays LIBOR scandal. Anyone knows that one?
No,
Don't say that.
no, that don't even sound familiar. Oh, good night,
Well, you-
everybody. Sorry.
What you mean that don't sound familiar?
Mm-mm. Barclays LIBOR?
Yes.
Mm-mm.
No.
No, no, no,
You know what LIBOR means?
no.
No.
That's the London Interbank Offered Rate. London Interbank Offered Rate.
London Interbank.
Offered rate. So when you see, let's see, an offshore bank,
Mm-hmm.
if an offshore bank is giving a loan to one of its clients,
Mm-hmm.
the interest rate is based on LIBOR.
Oh, okay.
That's the rate that they use. So the LIBOR is the rate that it's set, the rate of interest. So that's the rate that one bank will borrow from another bank every day. And that's the rate when they say they're giving a loan to a foreigner, whether it's to buy a house or whatever it is that they want a loan for. It's based on LIBOR plus. So that's that international rate. And no one knows about the LIBOR scandal. Never heard of it.
Never.
Oh my Lord. This is when they said that Deutsche Bank, Barclays Bank, Citigroup, JP Morgan Chase, and the Royal Bank of Scotland. They were saying that those 5 institutions together, they more or less created their own LIBOR rate. And they found that this scandal went back, in some instances, they say all the way back to 2003. And they said it was a collusion between these banks to set the rate. And they manipulated it. And what it caused was that items in the financial markets, like financial contracts, the prices were mismatched. And the same thing for mortgages and corporate fundraising and derivative trades on the international market, all of them were set at the wrong rates. And so that what happened is that there were a lot of lawsuits and fines and the damage to those firms, the public image, all of it was damaged because of the scandal in LIBOR. Because this is the rate where once set, banks can actually say, I am giving you a loan at LIBOR +2 or LIBOR +1.5. This is used by all international banks. So what they did was the traders in these banks, they deliberately submitted artificially low or high interest rates to force the LIBOR higher or lower to support their own institutions, derivatives, and trading activities. And why it was such a key or pivotal scandal in the financial markets is because that rate is the global rate worldwide. And you use the LIBOR to determine the interest rates that large corporations will pay for loans. Or they use it for individual consumers for mortgages or student loans. And of course, they use it in the derivative market. So if you manipulate the LIBOR, which means you're changing the rate from what it should be based on market, then what happens is that the rate is either too high or too low. But what they were doing is they manipulated it to fix for the price that they were looking for. And of course, they destabilized the whole global financial system. So no one have never heard about this scandal before. And what was so funny is that the traders themselves, they actually had communication between themselves where they were asking each other to set the rate to what they wanted it to be. And the regulators in the United States and in the UK, they levied fines totaling $9 billion on those banks, along with criminal charges, because it destabilized the whole financial sector. But they couldn't pinpoint no one person because it was systemic. And that caused a lot of the regulatory authority in Britain to change a lot of their guidances when it comes to the LIBOR rate. Then I should put the LIBOR on the final exam so y'all could read something about it. But it is
Hi,
a vision.
sorry, Ms. Archer.
What did you say, Donella?
We have a lot to read.
Oh, don't worry. We all read them together. No, but this one about okay. When you read about Enron and Palmer and those, they talk about financial scandals in terms of cooking the books, making the financial statements appear to be profitable when it wasn't so. You talk about destroying information so that auditors and regulators cannot see what is exactly happening in the organization. All they know is they receive some financial statements that look as if or give the appearance that the company is doing well when the company is not. But when it came to this scandal was a little bit more, because this were banks themselves, some of the largest banks in the world, manipulating the interest rate for their own betterment. And they couldn't pin it on one person because it was so widespread. So this will be just as if our domestic banks, when the rates that they're going to give to their commercial clients and persons who want mortgages, that they decide that they're going to manipulate the interest rate which means they're not attaching it to prime rate. They're gonna start changing the rate to suit their bottom line. So this was a really, really big scandal. Now, the next one, which is on your notes, is the Wells Fargo. I know you know about Wells Fargo. Say yes.
Not the case with the bank.
Oh, Lord. No, can't be bankers and don't know about Wells Fargo.
And see, in my role that I don't we'll never come across
These
anything
things
to do
paper,
with Wells Fargo.
but
Or
these are,
case similar.
like- you never heard about the scandal of Wells Fargo, where they had so much pressure on the staff
Mm-mm.
to reach these targets, the same way the local banks are doing here, giving people these high targets that they can't reach? No?
No, I only heard that Royal Bank was suing it at one point, but I never heard about the Wells Fargo cases.
Oh, my Lord.
Hello?
Yes.
Yeah, was that the case where they gave them these large targets and they were falsifying them?
Yes.
Okay.
Yeah. Mm-hmm. The Wells Fargo story is about corporate culture. It's about financial incentives and employee conduct, along with that cross-selling scandal. Because I remember a couple of years back, Scotiabank had started to introduce that also, that cross-selling, where they were giving incentives for persons to cross-sell, which means you get the loan and then you cross-sell it with a credit card and whatever else they had to cross-sell. And that means that people are desperate in order to meet these targets. So at least Ellsworth remember this one, Wells Fargo. But all of these are scandals that talk about the ethical behavior of the organization. And sometimes it comes from the very top, not realizing that when you put that amount of pressure and you put that incentive, that people will do whatever it takes to get it done. So that was another scandal that you need to read about. And I hear your cries. All right, so when you talk about risk and you talk about ethics, you begin to realize that in any organization, you have to know what are the inherent risks in your organization, what are the inherent risks in your products, what are the inherent risks in your delivery channels, what are the inherent risks in your customer base, and what are your inherent risks in your geographical mapping, which means where your clients are coming from. So when you're in a domestic bank, it's very easy because you know your clients are coming from one of the islands. But when you're an offshore bank, you could have clients coming from all over the world. And the organization has to decide as to which countries they're going to focus on in terms of getting or attracting clients. So in every organization, the new suite of legislation under the FTRA, FTRR, they all speak about conducting a risk assessment. And to conduct a risk assessment of any bank or securities firm or a lending firm, you have to know what is risk. And you have to know not only just what is risk, but how do you manage it and where is your risk intelligence. So the first thing you do is you have to understand the nature of your business. And your risk assessment is based upon your size, the nature of your business, the complexity of your business. Not all risk assessments are the same. So based upon your product and your delivery channels and your geographical sphere where you're going to market your products, you will then decide what risks are inherent in your business. And that's why it's so important from the very top, from the board, that they understand what are the risks that are inherent in the bank. And that's where you come with this term, the risk governance. That's the strategic decision-making done by the board. And that strategic decision-making is based on the inherent risk in the bank and the residual risk. Once you have determined what your risks are, then of course, you need to develop a enterprise risk framework. And then you go drill down further to define what are your risks and your risk values. Each department has to own the risk that correspond to what they offer, or what they bring to the organization. And that risk ownership means that if within your department, if you actually carry out mortgages, you then have to identify what are the risks, how do I measure it, how do I monitor it, how do I report on it, and of course, at the end of the day, you have to be able to summarize whether or not there are any potential operational losses, which will come from defaults or from power sale. But all in all, when you run an organization in today's world, everything is what they call risk-based. The board is always looking at what's the risk? What am I doing to mitigate the risk? So that's always key. And in order to mitigate against a risk, it means that senior management has to be able to report to the board in a timely manner as to how they are mitigating the risk. So if you think about it, what do you think some of the risks are in a mortgage department? It ain't that difficult.
Making sure that the source of funds are legal, for one,
Yes.
that you're not allowing somebody to launder money.
And don't forget now, source of funds and source of wealth. So source of funds refer to the money that's going to be coming in to pay that mortgage. The source of wealth means you said that your money that you have in your account, you saved it from, I don't know, sale of property, maybe inheritance, maybe life insurance, and they have to provide evidence of that. If you read in the paper recently, you will see where there are 3 Americans who have been, I guess they're under investigation. One of them bought property in the Bahamas, and he's under investigation for fraud, 40 million in fraud. And now the SEC is trying to find out where the rest of the money is. But he would have come to the Bahamas and maybe saying that his transaction was between $500,000 to 1.5 million, and he purchased a piece of property because he owns a company. He has a legitimate company, not knowing that the proceeds in that company were illegal. And so you see now why in all banks now, risk is so important. Because once you have a risk, that risk affects so many different parts of your operation. So one mortgage could cause a reputation of a bank. So, okay, so the first one is knowing the source of funds and the source of wealth. What other risk is there in mortgage lending? Don't we have legal risk? A lot of these cases we've been reading were on legal risk. The first one, source of wealth and source of funds, we can put that down to regulatory risk or compliance. What other risk is there in mortgage lending? Could be reputational. Any other risk?
Operational risk.
Yes, you gotta have operational risk, and also gotta have credit risk. Because you have the the credit worthiness of your clients. Because that is where you come then now to figure out whether or not you have, I guess, sufficient you have sufficient provisions to actually cushion the bank in the event there are defaults. So when you look at risk management and governance, you see in your notes there's a little triangle. And that triangle is telling you that in any organization, it starts from the very front. So even though the culture comes down from the top, the bottom, that customer facing, that's the first line. That's the risk owners. And after that is what they call the executive management, and that's the risk infrastructure and oversight. And of course, after that is governance, which is the board. So in all, at the end of the day, when the board does this strategic retreat twice a year, they're supposed to be looking at what are the risks and are we going to meet our objective? While at the first, you talk about identifying a risk, assessing it, mitigating it, monitoring it, and then you document it. And that's at the very first line. Because remember, whatever risk you have to minimize that for stakeholders. And stakeholders is not just your shareholders, but it's also your employees, is also the vendors that provide sources to the bank. So all in all, when you look at banking today, it's all about risk. And it's all about being able to identify it, monitor it, and document it. The regulators are making sure that you document how you're addressing each risk and that information is reported to the board in a timely and accurate manner. So there are some questions here. Let's see who could answer these. What is the organization's philosophy towards financial risk? You think you could answer that from your organization? What is the organization's philosophy towards financial risk?
Zero tolerance.
That came from the board?
No, that's just in general.
Okay, so I'll ask you this question then. If they have a zero tolerance towards financial risk. How do they mitigate against that risk in order for it to be zero? How do you mitigate against it?
You would have to make sure that you follow all of your checks and balances to ensure that, you do everything that's necessary to avoid that.
And I would say putting into place policies and procedures for employees to follow.
Yeah. And there's always checks and balances and separation of duty. That's one of the key things. In a lot of Bahamian companies, they don't have separation of duties.
And the thing is, they always have policies in place, but then where I think a lot of institutions fall down on the job is the check and balance part of it.
Because a lot of people do have policies and procedures, but they don't follow it. The second question, do supervisors understand the financial products and instruments that organizations uses? What do you think?
I don't think that a lot of, especially supervisors, a lot of times people do things, but they don't know why they're doing it. They just know, okay, this is a step that I must do, so this is what to do. But in terms of understanding, I don't think that a lot of people really understand the financial products and instruments and why it's being used.
And if supervisors don't understand, that means that exposes the organizations to more risk. So 3, who formulates the organization's guidelines and policies on the use of financial products? Who formulates the organization's guidelines and policies? Will it not be the department owners? Because that's where the risk intelligence is. The next question is, has the board approved these policies? Remember what I said when it comes to risk. Each department has to own its risk. And in owning your risk, you have to mitigate against the risk. And to mitigate against the risk means that you must have policies and procedures in place. Policies are approved by the board. Procedures by senior management. So the question, whenever you say you have policy, the question auditors always ask, was it board approved? Or if it was not board approved, then it looks to the board minutes to see whether the board raised the question as to where the policies for a particular risk. Question 5 say, how can the board foster a risk management culture within the organization? How do you think a board can do that? I know in your organization, they talk about risk. So how can the board foster that culture? The people that you don't see. Someone was just about to speak. Yes. Anika.
see me trying to, to unmute this mic again.
No, come,
Well, first, communication with the staff.
yeah,
You
but the
know,
board,
you have to, in identifying risks and evaluating risks, you have to make staff aware of what's going on.
Mhm.
You know, you can't foster a culture if you don't know what's going on, in the environment. So definitely you have to make staff aware, and not just department heads, not just management, but you have to go from the ground up. Everybody has to be aware of what's going on and what is expected, in order for us to be able to mitigate, any potential risks to an organization.
So so how does the board foster that? Because you don't see the board, you don't go to board meetings. So how does the board foster that culture?
Well, I guess passing down the information.
Yes, to management.
And making sure it trickles all the way down, like I said, to line staff.
Exactly. Because don't forget now that when the board meets management, it can get a sense of whether or not the culture is changing to what they want it to be. And certain key persons are represented at the board meeting when they give their contribution. And the board should be able to tell whether or not the culture is actually being ingrained in the employees. So 6 says, how did, go ahead.
Ms. Archer, part of the problem is, okay, the board hands down its directives to the executive management. Then you have middle managers, and then you have the line staff.
Mhm.
Part of the problem, I think, is that these decisions get made at the very top with no real conversation happening with the people who are actually out in the field. The middle managers are dealing with it front on, and the line staff are dealing with it front on. But it never really trickles up to executives and the board. So what they discuss and what they write on paper looks really great to them, but they're not the ones who are actually carrying it out day to day in the field. And because, you know, many times those persons who are actually doing that don't have any real input, there's a disconnect.
Yeah, I agree with you. So tell me how to fix that.
Well, how to fix it is they should involve, you know, those persons who actually have to carry it out day to day and deal with it, you know, find out what their input is. Because like I said, what looks good on paper and what sounds good up in the boardroom around the table, having coffee and lunch, it's not working on a day-to-day basis.
So what some organizations do is when they're putting together various committees, they try to get a person from the bottom and a person from the middle, along with a representative from management, and then of course, a representative from the board, if it is a board appointed committee, and you get a more well-rounded committee and decisions are made. And that's how you could get that culture from the board going all the way down to the bottom, because the representative from the board brings that message to that committee, where it's heard firsthand by those persons. That's one way you can do it. The next way you can do it is you have to make sure that when management, if you are the CEO, you have to make sure when management reports to you that management is actually engaged with the persons at the front line. And the only way the CEO can know that is if they move around and they themselves get acquainted with the persons from the front line up to middle management and to management. Otherwise, it will always be disjointed.
A saying comes to mind, Mrs. Archer, only they that feel it know it.
Yes.
So even all of that having been said and all of that having been done, it still boils down to the fact that, you know, sometimes you could attend meetings and put your input in, but whether or not it's going to be listened to is another story altogether.
Well,
Because like I said, those persons who make decisions and they sit upstairs in their cushy offices and they don't really have to deal with clients and be at the front lines, they have no clue and no idea, and they actually really don't care to listen to your pain and your suffering and whatever your input is, because, you know, it's not affecting them really directly,
Yes.
you know? So it's easy to hand down directives and say, okay, this is what we need you guys to do. But it's a different story when you're out there dealing with real people day to day, hour by hour, for however, you know, many hours it is, whether it's face to face, on the phone, over the internet, however it is, it's a different story altogether. And sometimes there's, you know, there's not even enough time in the day to explain all of that to somebody who isn't actually living through it.
Yeah. Okay. So if I take your comments now, and I am sitting on the board, do you really think I'm interested in that? As a board member, am I really interested in how many people you have to deal with?
No.
No.
No, you're not.
When a board or director comes, it has this package it received a couple weeks before and is looking for key things. One, are we making any money?
Are we making any money?
That's it. If there are losses, why happened?
Why are
Okay.
there losses?
Yeah. Then the next thing they look at is, are there any policies that need to be approved? What are required for us at this quarter meeting from a regulatory standpoint? Were there reports to be delivered to the central bank or the Securities Commission? Were they done? Yes. Were they on time? Yes. Did we have any fines? No. Board meeting is over.
Yeah.
That's it. So the only person to listen to your pains is your supervisor if they're interested, or your manager of that department. Going further up, they're not interested in that either. They have a quota to make that they have to prove to the board, and the board in turn have to be able to tell its investors or shareholders, this is how much profit we made. Everything is the bottom line. And you have a target and they expect you to make it. If you have so many issues that are hindering you from making the target, then in their minds, you make up your mind if you stay in the field or you don't. Because the model has been cast. And that's it. So how does the board ensure the integrity of the risk management system? How do they do that? Nobody knows? At every meeting, there's a risk report. And that risk report speaks to the level of the risk and whether or not the mitigation plans are in place and adequate, or whether there are additional things that need to be done so that the company does not incur any losses or increase the risk. And that's done with the risk report. 7 says, is there separation of duties between those who generate financial risk and those who manage and control these risks? Is there a separation of duty between the two? So who manages and controls financial risk? And who generates it? You all in the lending. business, so
When you
I
say
know-
generate, what do you
Huh?
mean? When you say who generated, what do you mean?
You're looking at credit risk, so that could be mortgage lenders. You could be looking at liquidity. Most of the banks are very liquid now. You could also financial risk to be looking at financial reporting, doing the accounts, monthly or quarterly.
So yes, there is a separation of duties.
Mm-hmm. Because the generation of the risk comes from who?
I think everyone has the potential to generate risk in every department.
Mm-hmm. Financial risk, yes. And who manages and controls it?
The CFO, eh?
Yes, the CFO. Because there have been instances where members, or let me say, they call them registrants under the Securities Commission or licensees under the central bank, where they've been trying to give the CFO other functions. And that can't happen. It has to be a separate duty between the CFO, who's managing and controlling, and those who generate financial risk. Because number 8 says, what type of financial products or instruments may the organization use? So what type of financial instruments may the organization use? You all are in the lending business. What kind of financial instruments do you use?
You have mortgages, you have bonds, overdrafts, line of credits.
Mm-hmm. And how are they valued? Do you offer them to all clients? Or there are different levels of clients?
I guess it's open to whomever can qualify.
Mhm.
Yeah. That's exactly how it is.
So at the biker conference, at the biker seminar, the inspector spoke about account opening in response to Galanis's comment about how difficult it is for Bahamians to open an account. Anyone read that article? It's the same one I spoke about when we started. Or was anyone at the seminar? Please tell me some paper today.
Hmm.
No, nobody read the paper today?
No,
I
ma'am.
I don't know if anybody else, but we don't have time for that.
No,
And
Ms.
I-
Archer, 7:25 this morning and working from then.
I second and third that,
Wanted
Ms.
to eight.
Archer. We don't have
Yeah.
time to even talk to each other, much less read.
Exactly, paper or in our department, that's up in the executive, where they making the policies and drinking the tea, that's them. They reading the paper, not us. Top floor
Oh,
with their muffin and their coffee.
And
Now,
they get the
on.
newspaper and they take it home with them.
hold
Yeah.
on, hold on. You see, because when you say these things now, you mashing my corn.
Sorry, Natasha, but you know, I mean, I down to the way bottom, so I don't have no time to read no
Yeah, one
paper.
of those things.
Yeah, so I barely have time to go to lunch. So, you know, I mean, I'm not that fortunate. Maybe somebody else in here, like probably you and Mr. Johnson and Mr. Barr. I don't know.
What is this? No, you
Yeah.
must paper. You must take the time. If you don't read the paper in the morning, then you have to read the paper in the night.
In the morning, in the night, and then we have class, and then I get children, I get a cook. I can't do that.
And a dog.
I'm a
Well, it's-
dog.
Well, then you need to get up at 6. You're going quiet on that one.
Yeah.
I don't understand. Oh. Anyhow, the inspector at the seminar, he spoke about how there isn't a level playing field for the Bahamas with regard to account opening versus the United States and Canada. And he was saying that in the United States, of course, you can walk into a bank, you present your passport and your driver's license, and you could open an account. Wells Fargo used to ask for passport, driver's license, and utility bill, and the utility bill had to have an American address. Same thing in Canada. And what Galanis was saying was, he don't understand why we here in the Bahamas have to provide so much documentation to open an account, and that it wasn't fair to Bahamians. And that's where the inspector said to him is that you're talking about two different jurisdictions, and the Bahamas itself, because we're a very small island with Black people, that of course the requirements here are much higher because there's a different standard for us. And that's how it is, and that's how it is globally when it comes to the Bahamas. Even if you're talking about products and you're talking about risk, you'll find out that when you're doing your risk rating in the Bahamas, and those same products are offered in other jurisdictions, you'd see that the risk rating changes because of our jurisdiction.
But why? I still don't understand why.
We're a very small nation. And what drives our business is the competition that we place on the big countries like the United States and Canada. They're the ones that set the rules as to how banking is to be done.
But they set those rules for several reasons. So, I mean, first of all, you know, it started out with citizens of that country coming here and, you know, using us as a tax haven. That was the first thing. So like you said earlier, everything is about the bottom line. And that's how they look at it. The bottom line is they were losing revenue with, you know, with persons leaving that country to come here to invest monies where they didn't have to pay taxes. That's the first thing. So that's why they put a hold on that and clamp down on that, because we were making money through our banking industry from those persons who were coming here to us, because it was lucrative for them and lucrative for us. And then the other thing is, you know, the whole drug trade situation, of course, didn't help us because that, you know, blackballed us and put us in a different category. And then the third thing is, for our own protection, we have an illegal immigration situation going on. So we do have to vet persons to make sure that they are legal and that they really, you know, have proper documents in place and whatnot. Otherwise, we'd have everybody running, scurrying all over the place, getting loans and buying land and doing whatever. And all the while they're illegal aliens and they don't even have the right to be here.
Well, that last, your third point raises other issues. Because the Bahamas itself has already been criticized as having too many undercurrents of money flow. Internationally, they want us to have everybody included in our money supply, which
We
means
need
they
to-
don't want a third layer and a fourth layer of money circling. They want full inclusion.
They need to mind their business.
Well, when you're part of so many international organizations, it's not that easy. So what they do is they look at the amount of monies that are being sent out here by Western Union and all the rest of those money this and money that. They look at the flow of money, the same way they do it in the United States. They look at the flow of money from the southern countries going to Central America and South America. And that's how they're able to track monies are moving back and forth. And they look at the same thing when they look at how much funds leave here, going to Haiti, going to Jamaica, going to Trinidad. They look at all of that. And then they look at the central bank report as to the amount of notes and coins in circulation. And then they could look at the balances of the banks when they send in their reports. And they all have to tie up and make sense. So for a very small nation, for a very small population, they still cannot fathom how we manage the amount of money that we do manage. And then take into consideration the in and outflows of cash. Again, you see the push with us being the first to have our own digital currency. They're moving towards all countries having that to eliminate cash completely.
Mrs. Archer, I don't think that the US ever got over the fact that they did actually occupy the Bahamas for exactly 1 year, many years ago, centuries ago, when the English, the Spanish, and the French were all fighting over the Bahamian Islands. The US actually occupied us for 1 exact year. And you don't forget now, they've been trying to buy us out a couple of times and it didn't work. So, you know, don't feel like they don't have it out for us when it comes down to that. You know?
Yeah.
Just like some of the other southern countries too, they have it out for us as well. So we kind of smack dab in the middle of a bunch of enemies all around, camped out all about the place. And we have to recognize and realize that and be aware that everybody has their own agenda.
Yeah, it's true. It's true. And I think when you look at the global picture, even though we have CRS, even though they have FATCA, I notice there's a shift now with a lot of Americans now coming to do business in the Bahamas. They are attracted to the Out Island properties. They are really pushing to incorporate companies in the Bahamas as subsidiaries of their companies in anywhere in their little Delaware and little Wyoming, where they have that tax-free status. And the Bahamas is becoming attractive again to Americans. Now, how long that will last, you don't know. But as a very small country that's competing with the bigger countries that offer the same products that we do, the competition is stiff. And it's a fight to stay in the market. And so if you're sitting on the board of any financial institution, you have to be aware of what's happening internationally. And you have to know what are the risks that are inherent in your business. You have to know how your firm is mitigating against it. If you're a part of an international organization, you'll see it and you'll speak that language more. Because when you actually make your contribution to the board, the local board, there's always a representative from the parent company. And you have to speak in that language of risk. And they want to know what is their financial exposure. They want to know how far we are from our strategic goal. What are you going to do? What is the hindrance? And everything is surrounded by risk. And the same thing with the very last question. How much information can a shareholder or stakeholder obtain regarding the financial risk of the organization? And that comes again, like I said, when the shareholders have their annual general meeting, they're looking at the audited financials, where the dividends are going to be paid. They would have expected that the board and senior management would have dealt with any risk and that there is a plan in place to mitigate against those risks. Because as a shareholder, you only want to hear the word dividends. You want to hear there are problems, because hearing problems means that there are losses, which means that dividends are not going to be declared. So everything today at any organization is risk-based. So even the Bahamas as a country, it looks at and assesses its risk. And most of its risk stems from what the National Risk Assessment has identified. Money laundering, cybercrime, human smuggling, corruption, terrorism. These are the risks. And now that because there's so much unrest in the Middle East, you see there's a lot of economic orders coming out, looking for these various terrorists who they either place monies overseas or they're garnering monies from overseas to support their terrorist activities. And so this business of banking has really become risky. Not just an onboarding a client, but even from existing clients that you have on the books, you really don't know what they are into. Any comments on risk? On the board? It sounds like everybody is happy. And quiet. Yes, Anika, what are you going to say?
Can we not include it on the tax?
Say that again?
You say any questions about it? I say, can we not include it on the task?
Oh, well, let's see first. Let me tell you what chapters I'm thinking about. I looked at my chapters last night and I said, my exam will come from chapters 2, 4, 6, 5, 6, 8, 9, 10, 11, and 12.
Oh.
So that's the whole booklet then.
That's all except 1 and 3.
No, no. Now, remember, each chapter from chapter 1 build, remember? They overlap. So that's why I put 2, 4, 5, 6. You may not see a question that is just on chapter 4. It won't work like that. You'll see a question and it may have a point from chapter 4, something may be from 12, 10, or 11. But you won't see something that's just on just one item. This is a practical class, so you will get a practical exam.
So the exam, the concept is mostly you'll be giving us like cases and we have to apply.
Yes, ma'am. We did many cases.
So any cases we should go over in particular.
But that would be the cases for those chapters when we did them. I hope you kept the chapters, the cases in order by the chapters. Did you do that?
I didn't do that.
Neither did I. And Miguel said all of the recordings are up, right?
It should
For
be.
the class.
Yeah,
Okay.
what I can do is I can send you an email with the cases that went with the chapter.
Please,
Thank
thank you so much.
I really would appreciate that.
So I'll send that and then I'll ask Miguel to make sure that all of the recordings are up. I'll send that to him tonight.
Yes, ma'am.
And he has confirmed is on November the 20th.
Yes, ma'am.
Yes, it is. So you will have choices. You'll have questions to choose from. No multiple choice. So 20, 25. So it depends on how I word them. Questions may be worth between, I can write them whereby the questions can be worth 20 points each, but that may be just too much for you to remember. Or I can do it whereby I can give you two 20-point questions, and then you could choose 6 out of maybe 9 questions at 10 points each. How that sound?
Still sounds suicidal, but okay.
Not. If I give you 2 questions at 20 points each, and then 6 at 10, the 10 points questions are shorter.
A 20-point question, that's a thesis?
Okay, so you don't want 20-point questions. You want them all to be what, 15 points? All at 10 points?
Miss Archer, we sound like we playing Russian roulette now.
Y'all tell me what you like.
We would like it if you don't give us an exam at all and just
And
grade
just
us
say
on the
pass.
fact that we showed up every single night and we talked with you and we, interacted and we made your life exciting for these last 12 modules.
Uh-huh. No, you will have an exam. So you prefer 10-point questions or 20-point questions? Let me know.
So if we have 10-point questions, that means we'll have 10 questions at 10 points each.
Yeah.
As opposed to 8 questions.
I can give you 2 questions at 20 points each. I will make those 2 questions mandatory, which means you must answer them. And then I will probably give you another 9 questions and you choose 6.
And for the 20-point question, could you just like give an example of like what that comprises of? Like, what you would be looking for in a 20-point question?
Cases.
Okay, so we'd have to break down the case.
Yeah. Mm-hmm.
Okay.
We did a lot of cases on mortgages. We did quite a bit on agreement for sale. We did some on realtors. So there's a lot of area we could cover. We also did the one on certificate of title, remember? We did quite a few on that.
Okay, if we go that avenue, can you narrow down the cases that we're gonna have to review then?
When I send you the cases with the chapters, I'll send you the focus.
Thank you.
Okay, then, let's go with that one.
Yeah,
Okay.
the 2 cases and then the others,
Yeah, the
the
220
20
questions, I will tell you the cases you need for those 2 questions.
sounds
Okay,
like
that would be good.
Okay.
That sounds like a plan.
And then the 6 out of the 9 questions, I will give you the cases to go with those chapters where they're coming from.
Okay.
Okay.
That sounds better?
Yes, ma'am.
Yeah,
Okay.
we can see some segmenting.
I don't know, but these set, Ms. Archer, as you can see, I'm not afraid to ask or beg. I have no shame. So
Go ahead. Something else you wanted?
no, I'm good now.
I wanted to ask, when will you send this information? Not the night before the exam, right?
No.
Tonight.
I will most likely, because I'm gonna start to draft it. So the first thing I'm gonna do is I'll draft my email with the chapters, with the cases, and then I'll look to see how I'm wording, and then I'll tell you which cases belong to the mandatory questions.
Okay.
You still didn't give a date.
Date for what?
When you
Tomorrow.
said it.
I'll do it when I
Expected.
tomorrow. When I come home tomorrow, I will do it. So you'll get it
Okay.
sometime.
Okay, great.
Yeah. So then you can begin studying.
Yeah.
Sorry, you cut out for a minute. You said we'll get it sometime tomorrow?
Yes, tomorrow night.
Okay, thank you.
Thank you.
Yeah. From work, I would start to put it together and send it to you. All right?
Yes, thank you.
All right. Okay. So get started. Start reading. At least you don't have to wait on me to start reading.
No.
Yeah.
It's sad
And then
reading.
I'll send the cases to go with the chapters, and I'll tell you which cases you focus on for the mandatory questions.
Okay, great.
So you said chapters 2, 4, 5, 6, 8, 9, 10, 11, 12.
Yes.
Okay.
2 mandatory questions and 6 out of 9.
Okay, great.
So tomorrow I will find it, and you will, when you see your email, you'll know that's your cases that you have to look at.
And the exam is how long?
Should be 3 hours.
Like the bar?
It's 10 a.m.
Sorry,
Miss
my
Archer-
mic is supposed to be on mute.
Miss
That-
Archer, you're all decided what y'all gonna do with me. Remember, I live in Freeport.
No, Mr. Pratt will have that done. He knows what to do.
Okay,
Yeah. You'll get your exam. Don't worry about that.
okay.
That will be there waiting for you.
Oh, jeez. Thank you, Lord.
Yes. 'Cause that exam is next Saturday. And so by Monday or Tuesday, Miguel will have that exam.
Okay. Thank you.
It'll be waiting for you. Don't worry about that. All right?
Okay.
No need to be
So he would-
frightened.
He
Please,
would give me instructions on where to go, or where to meet him, or,
let Miguel send you all of that.
okay, okay,
Everything
thanks.
center there. So I'll let him send you all the information.
We
Okay,
would, we
thank you.
would be less frightened, Ms. Archer, if you gave us some mock questions.
Okay, I'll send you one tomorrow.
I love it. Thank you.
Yeah, I'll send you one.
Appreciate you so much, if you only know.
I'll send you a mock. And if you feel like it, you can send it back.
Oh, yes.
You can send it back and tell me how you would approach it. I'll tell you if you're right or you're wrong.
That'll
Don't
help.
cry. Don't cry when I send it back.
That
So,
sounds scary.
no, I mean, just in case. Some people, they feel like, they're getting their feelings hurt and then they take it personal. Don't take it personal.
Oh, no.
No, don't take it personal. Take it as a learning and a learning
It's a learning experience, yes.
Yes. All right.
Yes,
I think-
ma'am.
I think that's it. All right, so I'll prepare and let me put here plus example of a question. Okay, I got it. Everything is in front of me. Okay,
Yes, Yeah. ma'am. Thank you.
Thank
No
you.
no funny ink, no pencil.
Okay.
Some people
What do you
like
mean by funny ink?
I
Pink or
just
green or purple.
papers on the weekend and this person wrote in some black inky pen. So like when they wrote, all the letters started writing on top of each other and
Oh,
was
they
like,
started to smudge.
yeah, and all I could see was
Yeah.
loops. It took me so long to read it. So
Mm,
try not to write in those smudgy pens.
mhm.
Yeah. Or like someone wrote an exam last semester, they wrote in pencil. Just as if the
Okay.
paper was blank, because I couldn't see a thing. It was hard to read. Very hard. So I think that's it. Y'all could be okay, man. Y'all got this. Worry not. I have faith in y'all. All right. So have a good evening. You have 7:36. Start
Ms.
reading.
Archer, before you go, what's the passing grade?
70.
70.
Okay. Thank you.
If you don't make, you have to do a supplemental exam.
My niece tell me I better get 100, no slapping up.
But that's not you just study hard.
Because I could never tell what I get. If I don't get 100, I might get cut up.
Well, you study hard, you never know.
Yep, I plan to, Ms. Archer.
Okay, well, study hard. Not a problem. All right.
All right, good night.
Good night.
Good evening.
Good
Okay.
night.
Everyone.
Night.
Night.
I
Good
know
night, all.
it was very quiet tonight.
Good night. I'm grateful for everything. Thanks all.
All right. All right. Talk to y'all later.
Okay.
Okay.
Okay, bye.
No slapping up, she said.